Hi there, welcome to kneppyinvests. In this video, I'm going to be looking at the most recent Appendix 4C for Dubber. This company does impress me, and it seems like it is really impressing the market because when you look at the share price action and the valuation of this company, the market is paying a bit of a premium. But Dubber is doing some impressive things when it comes to growing their company. And you definitely will see that during this video, particularly over the past year. So before we get to the Appendix 4C and why I and the market is impressed with this company, just a few facts in regards to Dubber. Naturally enough, Dubber's ticker code is DUB. The first red flag I do have against Dubber is their valuation. $710 million seems it is quite expensive for this company, especially when you look at the revenue and for the fact they are operational cash flow negative. So they're not profitable and they are still burning quite a bit of cash in their business. Revenue in the past 12 months, $12.4 million. Annual recurring revenue, $34 million at March 31st. But the most important things with the revenue and annual recurring revenue are they are growing that quite substantially. And as I mentioned before, they are still burning quite a bit of cash. And in the past 12 months, they burned through $13.1 million. And it does seem like, based off the most previous Appendix 4C, they actually are burning more cash than they have in the previous year. So one little metric I do use with these sort of companies, so Dubber is a cloud-based call recording software SaaS company. And for SaaS companies, I do like to calculate or look at their price to annual recurring revenue ratio. Typically, I look at the number 10 as being a magic number. Any SaaS company over 10 tends to be possibly overvalued. Anything less than 10 could be undervalued. But that's ignoring the growth rates of annual recurring revenue for SaaS companies. And when you look at Dubber's growth rate in their annual recurring revenue, it is impressive. So a number of 21, even though it historically is on the high side, you can justify that, or you could justify that based off their growth rates in their annual recurring revenue. So if you do want further information on this company, I do highly recommend looking at their Appendix 4C, which they released on the 30th of April. So let's get into the most important part of their Appendix 4C. And in my opinion, the most important part of the Appendix 4C is the cash flows from operating activities. This is where you see if the company is operational cash flow positive or negative. Now, the first thing I always go to is receipts from customers. It's probably a good idea to know or have expectations on their receipts. And for the March 21 quarter, they received $6.6 million in receipts, which was higher than I expected. And actually, I could say it was significantly higher than I expected, in fact. Now, in isolation, that number means nothing. You need to know the trend in receipts to judge how the company is going. So maybe the previous few quarters, that receipts from customers was higher for Dubber, or maybe it was significantly lower. So have a look at the trend in cash receipts in the next slide. And if you don't know what the trend is, you might be pleasantly surprised. Hint, hint. But the most important number I look for here is right down the bottom. And that tells us if the company is operational cash flow positive or negative. And for the quarter, the company, Dubber, was operational cash flow negative by $5.5 million. So they are spending a lot of money to grow. Now, typically, I do like a company this size, or even lower than this size, to be operational cash flow positive, because that means they are able to expand or grow their business through their own operations. It's a very important inflection point for any company, because at the moment for Dubber, because they are operational cash flow negative, they will have to possibly do more capital raisings or borrow money to fund any growth initiatives. But one good thing about Dubber for right now is they do have plenty of cash on hand. So at the end of the quarter, they had $37.7 million of cash. So they will be able to use that cash to grow without worrying about becoming operational cash flow positive. But at some point in time, if they can't control their costs without growing their receipts the way they have been growing over the past year, they will have to think about a capital raising, but at least that capital raising won't be in the short term unless they do a significant acquisition. Now we come to the slide which includes the thing that impresses me the most about Dubber, and this is the receipts history of the company. This is the reason why just looking at the receipts history for one quarter in isolation means nothing. You need to know the trend, and any sort of upwards trend in receipts history impresses me. But Dubber does not have a linear upwards trend. It actually has an exponential upwards trend. In fact, over the past year, that exponential trend is actually even growing at a greater rate than exponential growth. So it has grown significantly over the past 6 or 7 years at a compound quarterly growth rate of 26.4%. But you might say, or might argue with me, well, that's off a low base, because if you go back to July 2015, they only had $30,000 in receipts. And it's very easy to grow at a very impressive rates when it's on a low base. So what I did is I ignored the first few years, and I just wanted to see what the growth rates were over the past 3, 2, and 1 year. So even over the last 3 and 2 years, they've been growing receipts at around 25 to 26% per quarter. But they've really accelerated that growth over the past year, and we're now seeing growth rates in their receipts at 47% per quarter. If you get growth rates in receipts or revenue at 47% per year, that would be impressive. But this is per quarter. So they've grown receipts from $1.6 million in the April 2020 quarter to $6.6 million in the most recent quarter. So that's almost a quadruple in their receipts over a 1 year period. That is impressive. And that's why I think the market has really accelerated the share price over the past about 6 months or so, because it's becoming impressed with the potential of this company in the future. Analysis of a company is completely incomplete without looking at the charts. And I like to look at 2 sort of time frames for a company when it comes to charts. I like to look at a weekly chart, and as long as possible, so 3, 5, 10 years. And then I also like to look at the daily chart. So just zoom in on the past 6 months or a year. So the first chart we'll look at here is the 5-year weekly chart going back to May 2016. Not much happened with Dubber's share price from May 2016 to 2019. In fact, the share price was going sideways, so not much. The market wasn't that impressed with this company. It does seem like it became a little bit more impressed during 2019. Share price almost tripled from 50 cents to $1.50. And then COVID-19 hit, and we saw the share price retreat back to 50 cents. It then rebounded quite quickly, just like every other company. So that was not a recovery that was led by what the company was doing. It was just an overall market and economy recovery. But the company did have a catalyst behind their re-rating in the share price in October of 2020, and that was right there. So it was an investor update on the 14th of October, which I'll show you in the next slide. You can definitely see how that was the catalyst. And then they also released their October Appendix 4C, which really was the start of the upwards growth rate or acceleration of their growth rate in receipts for last year. You can definitely see that if you go back to the previous slide. And the share price has just continued to increase from there on in. So once we go to the daily chart, you'll be able to see how that catalyst really was the impetus behind the share price increasing. Here is the 1 year daily chart for Dubber. If we look at the period between May 2020 and early October the same year, the market was uncertain of how Dubber was performing. And we know that by just looking at the share price and the volume action during that period. Share price went sideways, got to a high of $1.40 in late July, and then a low of $1 in early October. And during that period as well, the volume was quite low. Then the company released an investor update on October 14. And that update assuaged the market fears about how the company was performing. So in that announcement, the company showed they were performing well, even arguably exceptionally well. Then the share price went sideways for about 3 weeks, so we had time to digest not only this update, but also their Appendix 4C before we had the opportunity to buy in at around $1.25. And then ever since then, the share price has gone higher. So it's gone from $1.25 to a current share price of $3. But for a period there between December and April, the share price actually did go sideways at about $1.75. So what was the catalyst for this acceleration or recent acceleration in the share price from early April? Well, it was 2 announcements. The first announcement was a Zoom or a contract with Zoom or something with Zoom. Now, the day before this announcement, the share price increased 10% on higher volume. So either there was loose lips or there was acknowledgement in the market that this announcement was forthcoming. So this was the first catalyst behind the acceleration in the share price of Dubber. And the second catalyst was their Appendix 4C that I've been talking about in this announcement. So those 2 announcements have pushed the share price from $2 to $3 or a 50% gain in a few weeks. That is all I've got for this quick take Appendix 4C for Dubber. If you have any thoughts about this company, make sure you leave a comment in the comment section. Any questions, I would love to answer them. I'll try to answer them as soon as possible. Otherwise, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.